Let me turn Sade down. Sorry, Sade. Love you, but I gotta talk. All right. Instead of trading the Nasdaq at 8 o'clock, because we're not getting a lot of movement, we're gonna trade either oil or gold. All right, we're gonna make it fun. We're gonna trade either gold or oil at 8 o'clock, because a lot of you guys haven't really traded commodities. And I want you guys to be commodity traders just like myself. So we're going to have a little bit of fun at 8 o'clock. We'll trade the NASDAQ during the day. We'll trade gold and oil and silver and copper and hogs and orange juice at night. All right. We'll look and see what's up, what's down. And then, we might even take some cryptocurrency plays, at 8 o'clock. So we're going to have a little bit of fun at the end of the day. But interest rates also helped today. The 10-year yield dropped. The lower yields definitely gave stocks a boost. What else happened today? If you were looking at Marvell, guys, Marvell is doing a deal. So Micro, what actually moved stocks today? If you were looking at Marvell, you would have heard that NVIDIA is about to put $2 billion into Marvell. So in the group chat today, if you're a super fan, early this morning, before the market opened, get this, guys, before the market opened, we told you guys that, maybe try and see if you can do the Millionaire Challenge trade in Marvell. I got to go back and see if it even paid out. I didn't take it today. I had a lot of stuff that guys, I've been busy. I've been really, really busy lately, which has been frustrating me because I want to sit down and take these Millionaire Challenge trade as well. All right. So I think in about a week or two, all of these things have been hitting me left and right. I think I'll be all right in a couple of weeks, right? I'm still trading the market when I can, but I really need to focus in on the market when I'm doing that Millionaire Challenge trade. But NVIDIA is building an entire AI ecosystem, not just chips anymore. They are investing in everybody. CoreWeave, SoundHound, Marvell. NVIDIA is trying to make sure that they don't get left behind if AI starts to blow up in price. Now, biotech was also moving. Now, we don't really talk about biotech that much. We really don't talk about biotech companies outside of Eli Lilly, but Apellis spiked today, Centessa and Agios. If you're interested in any of those companies, look at them. I'm not really into the biotech space unless I'm investing or trying to take part in the GLP-1 move. So really the only three companies I really even look at is Novo Nordisk, Eli Lilly. Sometimes I might look at Hims and I'll short Moderna. All right. So, mergers and acquisitions is back. So when you hear people talk about M&A, they're talking about mergers and acquisition. But it's back in biotech. All right. So you want to see that. You want to see companies coming in and buying other companies. All right. But Meta, NVIDIA, Broadcom, ARM, Meta did extremely well today. Another sector that did really well today was the sector that got beat up the most, which is the software company. So anything that's involved in software like Microsoft, they all did pretty well today as well. All right. So some of the buzzworthy stocks today, if you didn't know it, was NVIDIA, Marvell, ARM, which I've been telling you guys to invest in, and then you had your biotech companies. The cybersecurity companies that were up today, were the two biggest ones that we always talk about. Well, we talk about three. We talk about Palo Alto, we talk about CrowdStrike, and then we talk about Taiwan Semiconductor. All right. Cool. So let's look at the market. Let's see if there's anything else. There's nothing else here to really look at. So let's look at the market, right? Let's go and look at some charts. Let's change out some things. Now let's go ahead and look at some charts. All right, cool. So let's look at the MESs. So the MES is the micro S&P 500. So if you were looking at the micros today, you can look at the micros, guys, and still see what's happening in the real S&P 500. So if you were looking at it as a day trader or a swing trader, this is what you would have seen. All right. We are still in a downtrend, so we did hit a high, and this is the S&P 500 futures. So let me put it in terms that most of you guys understand. The S&P 500 futures. All right, so these are the S&P 500 futures, okay? As a day trader, as a swing trader, guys, you want to look at the futures market because the futures market is open even right now. All right. If you look at the chart right now, guys, we could be trading the futures market right now as we speak. Look, y'all see this? This is moving as we speak right now. Y'all see that candle? That's pretty exciting, right? I could buy this futures right now. While we have been sitting here talking, I could have made 671 to about 673. That's a $2 move. I could have made like $10 in the last 3 seconds. All right, so the futures market is pretty exciting. For you guys that can't trade from 9:30 to 4 o'clock p.m., especially you 9 to 5ers, you might want to learn the futures market. You can still trade the S&P 500 before the market opens, after the market closes. Shoot, you can trade at 12 a.m. in the morning. Now, you're going to need money. You're going to need about, how much? You're going to need about $2,600 to trade the S&P 500. But this is what intraday traders are looking at. Every dollar move, I'm going to make $5 just in that candle alone that you guys see right here. This candle that you see right here. Right now, if you were to buy it at that white line just now, this is a 1 minute candle. In the last 1 minute, this just moved $20 in price. All right, you could have just made $20 while we were talking. All right, right now it just moved another $5. All right, so, it's exciting watching, day traders trade, but this is what they're doing. They're looking at candles. They're looking for places that they want to buy. It's basically investing on a very short time frame, right? See how that's going up in price? All right, but let's look at what's happening on a macro level. That's a micro level. Let's look and see what's happening on a macro level. On a macro level. On a macro level, the S&P 500 has been going down in price. We are still not out of the woods, people. In fact, was go from these lows. All we did was go from these lows back to this white line. This white line, guys, is basically we're still underwater. We're still underwater. Right now, we're where this green candle is right here. That's us, this little circle right here, the green. This is what's happening right now. Okay? We are still underwater. We have not, that's why I said, guys, we're not out of the woods. We can reverse right here and go right back down. So that move to the upside was great, but day traders, that's what we do. We try to trade up to a resistance area or an area where, we want to buy low, and then a lot of day traders got out right there. And then what's going to happen is we're going to see what happens. We're going to see how the market digests this information. We want to see if this is really true. Is Iran really trying to negotiate? Because if any negative news comes out, guys, all we're going to do is this. We're going to hit this somewhere late tonight, and we're going to reverse, and we're going to go right back down in price. And then maybe we get some good news, and then we keep going down. We keep going down. in price, and then up, and then down in price, all right? That's all we've been doing. We call this lower highs. Lower highs is not good. See, that's a high, but this was a lower high. And this was an even lower high. And this was a lower high. And we might get a lower high there and then another lower high here. So even though you made money this way, in the long run, you're probably going to lose money if we don't get information fast. We need information. We need to know that we're safe. We need to know that Iran is not about to send a nuclear bomb over here. Now, guys, I just saw a movie this weekend. I encourage, let me see if I can find that movie. I encourage every single one of you, let me see if I can find this movie real quick. The name of the movie was, what was the name of the movie? It was The Dynamite. What was it? It was something Dynamite. Hold on. I know y'all know what I'm talking about. It was on Netflix. Can somebody think of? Can anybody remember the name of the movie? It's called the Dynamite. No, not Napoleon Dynamite. That's hilarious. Not Napoleon Dynamite. It was like the House of Dynamite or something. Was it the House of Dynamite? Hold on. Let me see. Let me go check real quick. It was the House of Dynamite. Look, y'all need to go watch this weekend. This weekend, I want you guys, this is your homework. I want you guys to go watch this movie. You guys need to go watch this movie. I'm about to take a picture of it. It's on Netflix, and I know all of y'all either have Netflix or you're stealing Netflix from somebody. But everybody here got access to Netflix. But I want you guys to go to Netflix, and I want you guys to watch this movie. And it's gonna give you a feel. It's gonna eerily feel like what we're going through right now. Okay? If you haven't seen it, I want you guys to go see this movie right here. This is it. It's called The House of Dynamite. It's not a feel-good movie. You need to watch it during the day. But I want you guys to go watch it. Write it down. Watch it with your boo thing. There's a lot of big name actors that are in it. It's a movie that nobody knows about. I'm surprised I don't even know if it aired in the movie theater. There's a lot of big names in it. Go and watch the movie. It's very surprising. All right. So go watch that. Let's get that out of here. Like, Joe, we want to hear about stocks. We don't want to hear about movies. Go watch it. All right. Feels eerily familiar, right? So this is the S&P futures, right? So the S&P futures, we're going down. So let's look at the S&P 500 on a week chart. Now, on a super macro view of the market, this is how the market looks. All right. So on a super duper macro view of it, the S&P 500 just looks like it's rolling over a little bit. Rolling over means that we're just selling off. We rolled over and now we're selling off and we're trying to settle at a nice support area. Now, you can use a Fibonacci tool and you can go back to last year's April move. Sorry about that. You can go back to last year, April, when we bottomed. And you can do a Fibonacci retracement, and you're going to see that we're at the 25% area, and we're starting to go down to, I keep telling everybody that we're probably going to this area right here. This would be an ideal area to have a refresh and you will get new investors to come into the market. Not only will that happen, guys, but if we can get down into that 5,900, 6,000 area, you're also going to see the relative strength index go to oversold. Last year, April, when we went down in price, guess what, guys? The relative strength index, which you guys can't see. Let me see if I can pull it up so you guys can see it. This is the relative strength index. Let's see if you guys can see it. All right, the relative strength index, y'all see over here in April when it went blue, it would have been a very good buying opportunity. You would have caught the lows. Well, if we can get down to the 6,000 area, I believe that relative strength index is going to go off, and that's going to give a lot of pension funds and mutual funds the strength to buy the market. But you're going to need it to come in some, because we're not there yet. I know we just went up in price. We're not out of the woods. The charts are still broken. You can't take away, even though we got positive news today, you can't take away what the war has done to all of our charts. All of our charts are horrible right now. Horrible charts. Horrible. Horrible. But I think we can come into about this 6,000 area. So to give you an idea of how far away we are from that 6,000 area, well, we're at the 6573 area now. If we get down to 6,000, the S&P 500 would drop about 8% from where we are right now. Now, 8% is doable, but that's double what we've already dropped. So whatever we dropped already, we need to drop another 8%. And I think that's going to give the market an ignition to start buying the market again. But not until then, in my opinion. That 6,000 area also coincides with this, which was this resistance area that we had way back here. Had way back here, 24, that was the resistance made the market drop, and we went oversold, and we bought up the market. We went up, we hit that resistance area, and then we went up in price. Well, more than likely, guys, anytime you break a resistance, the market loves to test that resistance area again. So all I think that's going to happen is a retest. We're not out of the woods. I think we drop another 8%. When we drop that other 8%, that's going to put us in the 6150 area, because markets always overshoot. I think we print a 5 just to scare it. 58. And then I think the market reversed. That's my call. That's my call. 59.50 is my call. In fact, I'm going to put an alert down there. I'm going to put an alert at 6,000 while we're here. I'm going to put an alert at 59.94, and I'm going to put a alert at 59.50. That's where I think we go. I sure do. And I think the market turns around, and it might take 3, 4, 5 months to get there. But I think we get there. All right, I'm also going to put an alert at 61.50. I might buy some call options here. 100 days out. All right, so we're not out of the woods, guys. So let's look at the NASDAQ. But before I get to the NASDAQ, do you guys have any questions? Any questions? Hey, Sean, don't let everybody know who's in it. It's supposed to be a surprise. But let me know if there's any questions about, are there any questions, guys, about what we're looking at? We're using the Thinkorswim platform. For you guys that don't know how to get the Thinkorswim platform, you can go on. You can open an account with Charles Schwab. Charles Schwab is going to give you access to one of the best trading platforms ever created, if not the best. Now, it has not been ranked the best. In fact, guys, the platform that got rated the best was TradingView. I always get them confused. I don't know if it's TradeStation or TradingView, but I believe it's TradingView. TradingView actually got the highest ranked, even though they stole their look from TD Ameritrade. They stole everything. They look, how they do things. They stole it from TD Ameritrade. They stole it from Thinkorswim. That used to be owned by TD Ameritrade. Charles Schwab came around, bought TD Ameritrade, and when they bought TD Ameritrade, they were able to capitalize on the platform Thinkorswim. So Thinkorswim is just a platform that you use or have access to if you have a Charles Schwab account. All right. If you want to follow along with all of my lives, guys, you either need to have a TradingView account or you need to have a Thinkorswim account, because you're not going to be able to use the same indicators that I'm using. All right. Thank you for that. Who just sent me that? Denny Tyler. Thank you. Thank you. Thank you. She's watching from Hawaii, guys. All right. You got people from Hawaii watching. You got Hawaii, you got Alaska, we got some people from, where are you from? If you're not from the States, put it in the comment section where you're watching this from. Not that Hawaii is not from the States, I'm just talking about the mainland. All right, if you're watching this from a different country, or you're not on the mainland, if you're watching it from Canada and you don't mind people knowing, put it in the comment section. Okay, we got Virgin Islands, we got Dominican Republic, we got Hawaii, I told you guys Alaska. So we got a lot of people from all around. So it's great. A lot of people say, Joel, why are you going so late? Why do you go on live so late? And I have to go live kind of late so that I can make sure that everyone has access to this particular live. All right. When I go live early in the morning, I miss out on a lot of people, and I'm sorry on the weekends, guys. I just can't go live late on the weekends because my weekends are my weekends, right? And then more than likely, I'm trying to spend quality time with family members and friends and family, and I just can't go live at 5, 6, 7 o'clock in the evening. I have to be able to get it done early during the day. Now, I can try to do it at 12 o'clock. The best time for me to do it is if I know that it's going to be raining, because if it's raining, that means I ain't playing golf. So if I'm not playing golf, I'll try to do a 12 o'clock, maybe a 2 o'clock live. In fact, this Sunday, I think I am going to do a 4 o'clock Superfan live. I don't know yet, but it seems that I'm going to be able to do it at that time. Let's look at the NASDAQ real quick. Enough about me. Let's look at the NASDAQ. Let's look at the MNQs. Pull up the MNQs, we're looking at the NASDAQ. So for you guys that like the Qs, or you guys that like the XLK, you can pull up the MNQs, and it's going to follow the same patterns. It's not going to be the same price. It's going to do the same patterns as the XLK, the QQQs. All right, so, a way to be able to watch all of them at the same time is by pulling up the futures contract. So for those that were looking at the NASDAQ, what do you guys notice about the NASDAQ? Even after today, the TTM trend said, I don't give a damn about the market going up today. We still printed a red candle. The NASDAQ said, I don't care. I don't care that you were up 3.5%. We in a downtrend. Which is why I love trending indicators, because trending indicators, it's like that friend. It's kind of like me that's going to tell you what the real, like, look, we went up, but we ain't out of the woods. So hooray, hooray, hooray. I'm glad you made money today. We're still in a downtrend until things change and we get buying for more than 12 hours, guys, we are in a downtrend. Now, this is the MNQs, okay? If you want to day trade the MNQs, you need $4,500. You need $4,500. Let me move this out of the way. You need $4,500 to trade the NASDAQ. But you can still watch the NASDAQ just to see what's happening, in the 100 largest tech companies in America. We printed a high at 26,400. We did what we call a double top. What is a double top? You're going to hear people talk about double tops all the time. Joel, what the heck is a double top? A double top is when you hit a high, you come down in price. So we hit a high here and we printed an all-time high. Then we came down in price. We tried to get back to that all-time high again, and we didn't push higher. That is what we call a double top. That is a bearish pattern, okay? And what you also see is that we were rolling over. So not only did you hit a double top, it rolled over, and then how many candles in the comment section before I even circle it? When you're using a trending indicator and you're using the what would Joel do method, how many candles do you need to establish a trend change? How many candles, guys? How many candles do you need to establish a trend change? You got it. Denny got it right. You need 3. Now, you want to stay in it for 10 candles. You're right about that, Christina. When I decide that I want to trade, yes, when I see it go red for 3 candles, I want to short. But right around the 10th candle, I want to start thinking to myself, should I take profit now? Or should I put my foot on the gas? How many red candles do you guys see? How many red candles do you guys see? How many candles? How many red candles do you see? I'm teaching you guys how to use trending indicators. There's nobody on TikTok teaching about trending indicators. There's only 2 people. One doesn't go live, and that's my boy Sean Hunter in the comment section. I'm trying to get him to go live. And me. Nobody else is using trending indicators on TikTok. I rarely see anybody using Heikin Aiki candles or anybody using the TTM trend. Doesn't mean that we're better than you guys. It just means I love to color code my chart. I want the charts to be the same color so that I understand the trend. In trending indicators for the first time, this is how you use them. 3 candles establish a trend. 10 candles is kind of how long you want to be in it, depending on what chart you're looking at. So people say, well, Joe, what if I'm looking at a 15-minute and an hour and a 2-hour chart? Well, you need to pick one chart. Because if I was investing in this, or not investing, let's say I was short the market, and I'm in it for about 10 candles. This is 10 weeks, so this is a week chart. So for you guys that don't know this, we are looking at a week chart. That means this is 10 weeks of the market going down. That's crazy because look, well, sometimes you get 10 weeks where it goes up. 1 candle, 2 candles, 3, 4, 5, 6, 7, 8, 9, 10 green candles. Then we got 10 red candles. Look at how many green candles we had here. Look at that. Sometimes you just get lucky. Sometimes you get lucky, and that's why I want to get lucky sometimes. I want to be in a trend like this for 10 weeks. And then I want to say, hey, should I take profit now? Or should I keep my foot on the gas? See, when we had one candle, two candles, three candles, 4, 5, 6, 7, 8, 9, 10. This is your 10th candle right here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is the 10th candle here. In fact, when you got your 10th candle, guys, did y'all know that the market actually went sideways for 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks, 7, 8 more weeks? You didn't make any money. For 8 weeks, you could have gotten out the market and been fine. Okay? Because even if you got out around the 9th or 10th week, there were other green candles, but the market really didn't do anything. And then it took off again after about 10 candles. And if you notice, even from this low right here, if I was to count these candles to the highs, watch this. 1 candle, 2 candles, 3, 4, 5, 6, 7, 8, 9. Do y'all know the 10th candle was the all-time highs? Crazy, right? Crazy how a guy that y'all have never heard of came up with a strategy that he learned on his own by back testing. I don't know if anybody else uses a 10 candle system to trade, but I do. And I didn't do it because I learned it from somebody. I did it because I'm just ignorant like that. I just go back and I back test for 6, 7 years and I look for patterns. I'm a pattern recognitionist. That's what I do. And I love doing it. Some people have these little quirks about them that's kind of weird that most people don't understand. Well, that's my weird quirk. I love back testing things and seeing if I can see a pattern within a pattern within a pattern. And then when I see those particular patterns, I try to visualize those patterns so that everyone else can see it also. And I've been teaching this for the last 10 years. All right. But now the NASDAQ, let's erase all of this crap. Now the NASDAQ is going down. We're not out of the woods. If you want to learn how to get out of the woods, this is the What Would Joe Do method. And a lot of you guys are going to balk at it because you're going to say that doesn't make sense, but that's cool. It doesn't have to make sense to you because it makes a lot of sense and dollars for me. When things go down in value, this is the What Would Joe Do method. If I had to explain it in a sentence, it does not matter what chart you look at. I created a system called the BTG system. In the comment section, can you guys explain to everybody what BT and G stands for so that you guys know that I'm not bluffing? What does BTG stand for and why do I use it in every strategy that I use and on every single chart? Because one thing I noticed is that it doesn't matter what chart you guys are looking at. You realize y'all have to ask me what chart you're looking at. Most of the time you guys are like, Joel, what is that, a week chart? Is that a minute chart? Is that an hour chart? The reason why you guys can't figure out what chart it is because every chart exhibits the same patterns. So I was like, well, dang, if every chart, can't I just trade one way and just either trade really, really fast or really, really slow? It's like walking fast or walking slow. You know, slow walking or running, right? It's still the same motion. And that's what I've done. I've broken down my whole trading, investing, and trading strategies for one pattern. B stands for bias. There you go. You guys are on it. B stands for bias. T stands for trigger. G stands for goal. Every single solitary chart is going to have a bias. The bias is usually a moving average. I don't care what moving average you use. I really don't. There's no moving average that's better than the... Guys, I'm going to be honest with you. Remember, every chart's going to exhibit the same pattern. There is no chart that's better than the other chart. Okay? Now, I will say this. If you are intraday trading and you're trading within a certain time frame, like a 2-hour time frame, you can't trade a 2-hour chart or a 4-hour chart when you're trying to trade for 2 hours, unless you learn how to trade within one candle. Now, I will say that. But every chart, you guys are going to have to pick your favorite moving average, and you're going to have to figure out how to trade around it or how to use it to your advantage to give you that bias. That's going to stop you guys from flipping to and from 17 different charts. Pick one chart. I promise you guys, you're going to be okay. You just got to stick to it, and you guys got to commit to it. All right. If I'm intraday trading, everybody knows that I'm using either a 5-minute chart, a 3-minute chart, or a 1-minute chart, depending on how volatile the market is. Lately, I've been using a 1-minute chart. I haven't used a 1-minute chart in years. The volatility is just up, so I need a 1-minute chart. So most of my trades don't last but for 10, 15 minutes because I'm looking for 10 candles. And I'm making 100 points in 10 minutes. Okay, 100 to 200 points. That's about half the move of the NASDAQ. Guys, the NASDAQ is giving you half of its move in 10 or 15-minute moves. There's no reason for you guys to be using a 15 or an hour chart if you're intraday trading. The bias that I'm using when I'm intraday trading, I know you guys are like, it's the 10-day moving average. It's not. It's the VWAP. All right. So I'm either using the 10-day moving average or the VWAP when I'm day trading. When I'm swing trading, I'm using that blue average that you guys see. That's the 200-day moving average. When I'm investing, I'm using the yellow brick road. 3 different biases. Very, very easy for you guys to understand. Now, trigger is going to be what gets you into those trades. If you don't know what your trigger is and you can't explain what your trigger is in one sentence very, very clearly, then you don't have a solid strategy. You don't. I can just say, oh, when the candles go green, 3 candles, I try to get it at the 10-day moving average. Bam, that's it. You see how easy that was to tell you guys my trigger? Now, can I gamble sometimes and get in a little bit early or late? Yeah. But if I had to explain my strategy, it's 3 candles. When it pulls back to the 10-day moving average, I'm going to get in. How long are you going to try to stay in, Joel? If I'm day trading, I'm trading the MNQs. Actually, when I'm day trading, I'm trying to make $100 or more for every contract that I buy. Very, very simple. When I'm trading options, I'm risking 50%. Very, very easy. You see how I can quickly tell you guys what my risk is? And I know you guys are like, well, what's your reward? Your reward is always going to be equal to or greater than your risk. If you guys are risking 100% per option, but you're only taking 25% here, 10% there, 5% here, 10% there, you're not going to be in this game that long. It's only a matter of time before you lose, and you lose everything. And then you wonder, what's wrong with my strategy? There's nothing wrong with your strategy. You're just risking too much. It's just math. If I take 10%, and then I risk 100% on the 11th day, you won 10 times in a row, lost the 11th day, and lost everything. There was nothing wrong with your strategy except you take too little and you risk too much. Very, very simple. When you guys come to me, some of you guys are taking these expensive classes because you think that your strategy is broken. Your strategy is not broken. You just have the wrong risk to reward. And you're paying people $10,000 to teach you that. Actually, they're not even teaching you that. All right. And I'm trying to keep that money in your pocket. I'm not here to make you feel bad about the choices you've made over the years. I'm here to get you guys on the right side of the trades. You're going to be wrong. When you're wrong, you want it to be little. When you're right, you want it to be big. When you're wrong, you want it to be little. When you're right, you want it to be big. I want you guys to be allergic to losing. I hate losing. I don't like how it feels. I don't care if you guys sit in losing trades for 2 minutes and be like, I don't like this, and you get out. because I rather you stay in winning trades for 5, 6, 10 times longer than you're in losing trades. Try that. Time how long you guys are in losing trades, time how long you guys are in winning trades. If you are in losing trades longer than winning trades, your strategy is broken. All right? Very, very important. If you're spending way more time in losing trades than winning trades, your strategy is broken. And you need to figure it out. It's very simple, guys. I know you're like, dang, that makes so much sense. Yeah, that's my job. My job is to make everything simple for you guys because we're using common sense. We're just using common sense in the wrong way. All right. We understand buying low and selling high, but we don't actually know how to apply that when it comes to the market, because buying low and selling high, guys, is not buying at the April lows of last year. Buying low and selling high is buying when you hit that trend line at the lows, and that trend line is angled at a 45-degree angle. If we were buying low and selling high, this is how it looks. This is buying low and selling high, guys. I'm going to show you. Let's say you were riding this trend to the upside. Let's say you were riding this trend to the upside. I know you guys don't want to get in. Why can't I do the trend line here? What we're missing is that you need to start doing we need to bring channels back. Channels are important because buying low and selling high is this. You want to buy something that's going up in value, but when it's coming down to the channel, that's buying low. When you hear people talk about buying dips, that's what they're doing. They're not buying dips like this, like the stock falls from here and then it falls all the way down back to the price that it came from in April. Now, if we can get to this yellow line, yes, I want you guys to buy, right? As an investing strategy, this is what we want to do. As a trading strategy, this is what we don't want to do. Investing, you have time, you have patience. Trading is about momentum. Investing is catching them lows that you don't ever see but often, once or twice or 3 times a year. Buying low and selling high. But even then, guys, even if the market sells off, you remember how I kept telling you that if we come in about, 10%, that's where you guys should buy? A lot of you guys are not putting those areas on your chart, because if you go to the lows of last year and you do a 50% retracement, the professionals are looking at this area. The newbies are looking at this area because they think we coming back to the same price that we were last year. It ain't happening. This is what the professionals are looking at, even if you get it here. If the NASDAQ comes down here, guys, to the 18,000 area, which is going to be a gift. This happens every 4 years. Sorry about that. I was wrong. Every 2 years, the NASDAQ might see the yellow brick road. This 18,124 is still higher. Well, is it? Oh, that's the wrong value. That's 18. Yeah, that's 18,124. So why is it? Oh, that's 16. That 18,000, guys, is still higher. That 18,000 is still higher than the 16,000 from last year. Even though it pulls back. You see, that's still higher. This 18 grand is higher than this 16,000. I talk to you guys all the time, and a bunch of you guys are waiting. A bunch of you guys are calling 15,000. And I'm like, are you serious right now? 15,000? You're never going gonna freaking get into the market if you're calling 15,000. Can it happen? Anything can happen. But if I was a betting man, 15,000? You think the market's going to go lower than it did last year during the April tariff lows when the volatility index hit 50. 50 took it to 16,000. Remember, when it went to 16,000, guys, we were already at 22. So we're higher now with the same selling pressure. Even if we get a 50 VIX, it's going to be almost, I'm not going to say impossible. You're going to need a nuclear war, or you're going to need China to invade Taiwan in order for you to get it in that 15,000 area. You guys are not being realistic on where the market can actually drop to. And the reason for that is, that's what we do. We want the best price ever. And we sit there and we wait and we wait and we wait, and it never gets there. And then we feel like, why is this market rigged? Why did it go up without me? Okay? So, I want to make sure that you guys understand how to look at the market. All right? Let's look at Shell. Let's look at, Shell. What's the ticker symbol for Shell? Do you have the ticker symbol for Shell? It's not even showing up on my page. If you don't, then I'll just pull up another. There was a question, Christina. You said, do you use Heikin Ashi when you day trade? I most definitely do. Let's look at a day trade real quick before I get to you guys' stocks. So let's look at. Let's say you were trading the Dow. I don't even know what the Dow did today. So I love doing that because it tests the way that I look at the market. So let's look at the YM. Let's say I wanted to trade the YM today. So I'm going to pull up a 5-minute chart first. So if you were trading the YM today, first of all, we were above the VWAP. All right. For you guys that are not using the VWAP, what direction is this VWAP angled? It's angled up. So I really only want to take trades to the upside. All right. When we're above the VWAP, I know a lot of you guys trade to the VWAP. All right. I'm doing the same thing, which is kind of weird for me because I normally don't do this. But I've been noticing once you get about 100 to 200 points away from the VWAP, we go back to it. Same way I used to trade it. Man, I used to trade the VWAP probably 10 years ago. I didn't have the TTM trend. Did I have it? 2016, 17? I guess I just started using the TTM trend. Definitely wasn't using the Heikin Ashi candles. So if you were trading this today, and you wanted to be long, you could have taken a shot right here. We hit a moving average, which is the VWAP, which is the volume weighted average price. If you saw 3 candles that were Heikin Ashi candles, you would have seen this. You would have trading, if you were using the what would Joe do method, you would have seen these 3 candles, but that doesn't mean I'm necessarily about to get in. I want it to come down to this 10-day moving average where Joel would have bought. I would have been in this trade somewhere in the 45,900 area. If you want to trade like Joel, this is what you do. Then we rose from 45,900 all the way up to about 46,552. Can someone tell me, if I had traded this today, how much money could I have made if I was trading the futures market? Do the math. If I was in this trade at 45,900, let me see if you guys can see it. And I rode this all the way up to 46,600. And I make 50 cents per dollar move. If I made 50 cents per dollar move, 50 cents. That means I'm going to get paid 50 cents. Well, I'm not going to get paid, but I'm going to be up 50 cents. And that's real 50 cents, 2 quarters for every dollar that this thing goes up. How much money could I have made? You got it. 700 times 0.50 is $350. That was a $350 move. Trading the futures market, day trading. How long did it take to make that money? Well, if you were trading the way that I like to trade, right around that 10th candle, it did go red, so it started over. 1 candle, 2 candles, 3 candles, 4, 5, 6, 7, 8, 9, 10. Right around this candle, I would have been thinking about getting out or seeing where I was at the time. It hit 46.6, pulled back to 46.3. I probably would have put a trend line there, or I would have been looking at my tee time, and I would have said, I need to go because I need to go play golf. Maybe if you break this trend, then maybe you can get out. And I mean, it did trend higher. It did trend higher, but not by much. If I was trading that today, I needed $1,700 to take that trade. You guys are right. That's all I needed. If I wanted to day trade this today, all I needed was $1,700. I could have made about a 25% return. Now, I know what you guys are going to say. Well, Joel, I can make 25% returns in the options market every day. Yeah, but if you don't have a cash account, where you can get in and out depending on how the funds that you have in that account, you are only going to be allowed to buy and sell that option 3 times in 7 days. Otherwise, they're going to ask you to put $25,000 in your trading account. They're gonna say, look, you done took 3 trades today. You need to put $25K in there because you're now a pattern day trader. If you were trading the futures market, you didn't need to have $25,000. In fact, all you needed in your account to make that $3,500, guys, was $1,700. 1,700. I'm gonna write it here. $1,706. That's it. Now that's a lot. But man, that is one of the, when people are talking about opening up their own businesses, when people are thinking about opening up their own businesses, they be talking about 5 figures and 6-figure accounts. And I'm like, you can open up your first trading investing business with as little as, $100 to $500. And that's equity in your company. Right? I've always felt like the stock market was the building blocks of all business. Like before you go out there and create your own business for yourself, let's see how you handle owning stock and selling stock. Because it tells manage funds and your risk to reward. Because a lot of us have great ideas when it comes to business, but we risk too much and we take too little. A lot of you guys that are building your TikTok platform, a lot of you guys are spending too much money on TikTok trying to build your business, and you're not taking in enough funds. So then you have to ask yourself, how much longer am I going to go down this route before my business becomes profitable? It probably shows up in the same way that you handle your stocks or your investments as well, or the way that you day trade. You fix that problem, I promise you it will help you across all of your businesses. This is the building blocks of business. All right, let's look at did anyone find Shell? Because I know you guys wanted to look at Shell, but I couldn't find it. So I'm going to go along and look at the SLV. All All right, let's look at SLV. So SLV is not SWV, not Sisters with Voices. SLV. All right, silver. Silver is still dropping in price. And no one can believe it. They're like, I just don't understand, Joel. It's an industrial metal. Gold is up. Why is silver not going up? Silver is considered like the speculative commodity. When everybody makes their money on gold, then they like to run and grab silver. I'm in silver as well, guys. Am I up? I think I'm at break even. What price did we get this? What price did we start buying this at, guys? What, 65, 66? So we're up the group is up like $2 from the entry that I told them to get in. So no one in the group chat can be mad at me right now because we're at break even. We're at break even or a profit. So, if you feel uncomfortable with holding silver, sell it. You're going to sell it for $1 profit. All right, per how many shares that you own. Oh, I put GLD. This is not GLD. This is SLV. Sorry about that. I am wrong. Silver. All right, so silver, guys, instead of buying physical silver, you can buy SLV, which is the stock ticker, because this index, this ETF, this trust is backed by real silver that's being bought. And it moves with the value of silver. Now, it's not 1-to-1. It's close to it, though. It's like 0.98. So when you look up real silver, I think real silver is at like $70. So it's lagging by about maybe $2. Okay? But it's following it really, really closely. If silver's up 10%, this will be up, 9.8%, right? It's really, really close. If it's down 7%, this ETF is going to be down, 6.75 or sometimes even more. It's also, you guys see how all of these charts look the same? We're not out of the woods. All we did was break up against this trend line. This is the trend line, this white line. So if you can't see the price, if you're not pulling it up on your own platform, silver hit a high of 109. Right now we're sitting at 68. I tell people all the time, if you can grab an asset or a commodity like this that's down 40%, man, you're getting it on sale. I always believe that everyone should have 10% of their portfolio in some type of commodity. If you got $100,000, guys, in your self-directed 401k or self-directed IRA, in my opinion, 10%, even as high as 20%, should be in some commodity, whether it's gold, silver, oil, maybe even some Bitcoin. Okay, 20% of your portfolio, if you want to be kind of aggressive. The 20% holding of gold is going to help you, with inflation. With inflation, gold is going to start rising in price. So a lot of professional traders, they're going to tell you to do the same thing. Why not own some gold? Why not own some silver? Even if you had $100,000 in commodities, it doesn't all have to be just in gold. That 10,000, 3,000 can be in Bitcoin, 3,000 can be in gold, 3,000 can be in silver. Okay? You can even put half of it in maybe miners. Even though I don't really like when people say, Joel, should I buy the miners instead of buying the gold? I still look at the miners as companies. So that's still not diversified in my opinion. They're not the same. Even though they're mining gold and they're mining, like FCX, for example, Freeport McMoran, I'd rather you have the precious metals and then you have a mining company. And they are separated because there are times where mining companies can be up and the commodity can be down, or the commodity can be up and the mining company can be down. But if you're interested in buying silver, if we break out of this triangle, it should be bullish. All right. Silver did get pushed down in price, but at least if you're buying it here, guys, you're buying it 35 to 40% off of its all-time high. So you got some equity in that particular commodity. If we're looking at gold, let's go ahead and look at, if we're looking at silver, let's look at gold. My favorite ticker symbol is going to be the GLD. Look at what the GLD is doing. Same thing. It's not going to be down as much as silver. Silver is going to be your more speculative play. All right. It's going to give you the most bang for your buck when it's going up in price. But when it's going down in price, silver is going to be, you don't want to be in silver, right? When it's going down. Because even when gold dropped in price, gold dropped 20%. Silver dropped 40, gold dropped 20. Okay. Gold dropped 20% when it dropped from, what price is that? When it dropped from $509 to $400. Gold hit a high of $509, which was about $5,000 an ounce. And then it dropped down to $400. In my opinion, you're getting gold 20% off. Buy it. It's a precious metal. It's not going to zero. I hope it's not. Even if we have a nuclear war and we're all sitting in bunkers, I still believe gold would be valuable. We still gonna be wearing our gold chains if we are in a bunker. We just are. That's just how humans are. All right. 2 or 3 chains at that. I know I'm going to be wearing mine. Anyway, so if it goes down in price, we are still not out of the woods. Y'all see how all of these charts look the same? We are not out of the woods, guys. We are not out of the woods. It went down in price. We need to break this trend line and start to go up in price. And we're not doing it. But if you're thinking about buying gold, you can buy it 21% off. If you were looking at the yellow brick road, we are so far away from the yellow brick road, it ain't even funny. The yellow brick road is down here at 250. If gold gets cut in half, I would be surprised if it did. But if it did, guys, I definitely will be loading the boat. I don't know. I would buy it at 240 before, I don't want to say before crypto. I would have to see what price crypto was at that time. Because y'all know that gold and silver has outperformed Bitcoin in the last year? Did y'all know that? Did y'all know that commodities have outperformed cryptocurrency? And cryptocurrency was supposed to be that thing that protected us in times like this. We're now starting to realize that good old-fashioned gold and good old-fashioned silver and copper are still the places that institutional money still loves to own in terrible times like this. All right, so let's look at let's get to some stocks. So I see AAOI. Applied Optoelectron. Now, look, guys, I don't know what this company does, so this is what we do. When you find a company that you don't understand, or we don't know what they do as a company, what we're going to do is we're going to go to ChatGPT. What I want you guys to do, when you go on Reddit and you hear and you get a stock tip, I'm going to show you guys how to break down a company. You're going to go to 3 different charts. The first chart you're going to go to is your Yahoo Finance. This Yahoo Finance chart, guys, this Yahoo Finance chart is going to give me all the information, fundamental information I need. AAOI. It's going to give me all the basic information that I need. So when I pull up applied, hold up, you guys can't see that, so let me change that out. Why can't you see that? I don't know, but I'm going to make it smaller so that you can. All right, you should be able to see that. All right, cool. That's perfect. All right. So it's telling me that the market cap of this company is $6.57 billion. That means in the comment section with a $6 billion market cap, is this a baby, an adolescent, or an adult company? Is this a baby, an adolescent, or an adult company? In the comment section, let me know. Let the people that are new here know. Is this company a baby, an adolescent, or exactly, this is a company that's a baby. Guys, we make fortunes off babies. We do not make fortunes off of adult companies. Companies can be around for a long time and still not be an adult. Companies can be in the market for 2 years or 1 year and become an adult very, very fast. We make money on babies. I get this question all the time. Joel, what is the minimum market cap that I should be looking at for companies? What is the minimum market cap? In the comment section, let me know. What is the minimum market cap of a company that you guys should be looking at? $1 billion. You guessed it. I know you guys are like, but why shouldn't I look at penny stocks, Joel? Shouldn't I be looking at $40 million companies or $100 million companies or $10 million companies? No. You can put it on your radar. You're an adult. You can do whatever you want. Honestly, you can do whatever the heck you want. But those companies are not going to get added ever to the S&P 500 or the Russell 2000, where they get guaranteed money, where funding comes in, when they get on everybody's radar, where investors pour money into those companies. I don't care if it's the cure to cancer. If Wall Street doesn't want to invest in the cure of cancer, then the cure of cancer business is not going to grow. 1 billion. And it's not, if I had to pick a number for Wall Street, that's just the number Wall Street picks, all right? There is no specific number. But 1 billion is around that number. 1 billion is a baby that gets you in the door. That gets you, sometimes you can be worth $1 billion and you're still going to be regulated by the SEC. There are certain companies, guys, that are $1 billion and they're not regulated by the SEC. So if that company is on pink sheets, if you ever go to buy that company and it says, buyer beware, this company is on pink sheets, I don't want you guys to buy it, because that's letting you know that it's not regulated by the SEC. It's not a company that's reputable, that's being monitored for, they're not showing their financial records. They can say any and everything about that company, and it can just be a pump and dump scheme. So stay away from anything that are on pink sheets and stay away from anything that's $1 billion. Now, you professionals, you're adults. You can do whatever the heck you want to. All right? I'm talking to my newbies that are just coming into the market. All right? Now, we have a company that's called Wait, I can't even read that. It's not that I can't read, I just can't see it. Applied Optoelectronics, Inc. It's a $6 billion company with a 3 beta. Guys, this stock in the last 52 weeks, because this is the information that I'm looking at. When I look up a stocks, the very first the only information that matters to me is this right here. All right, I'm going to show it to you guys. This is the only thing that matters to me when I pull up this stock. only thing that matters. What matters to me is that market cap. That's where you make your money. Ooh, if this company ever went to $60 billion, I make 10 times my money. I don't care what the stock price is. Y'all see how I never even looked at the stock price? I don't care because I can put 1,000 in it. I can put $10 in it if I want to. I can put $100. I don't care about the stock price. What I do care about, though, is that market cap. Because if I put $10 into this company and the market cap goes from $6 billion to $60 billion, my $10 goes to $100. If I put $100 into this company, I don't care if it's 1.5 share. If I put $100 in it and that market cap goes from $6.5 billion to $65 billion, that $100 goes to 1,000. I don't care how many shares it is. I don't care if it's half a share. What matters to me is if that baby can grow 10 times its value and become an adult. That beta is also, I love the beta, but I also know that when this stock drops, it drops. Any stock that went from $9 to $128 in 1 year, I'm sorry to tell you this, guys, it's gonna drop a minimum 50% in the next year. Be prepared for when it happens. Wall Street investors would be idiots to not sell after it grows that big. It's just gonna sell off. It's gonna sell off. It might be people that own the company. It could be shareholders. If a shareholder sees their stock go up 1,000% in a year, it's no way on earth they're not gonna sell. That's like $100,000 going to $1 million. You just gonna let your $1 million just sit there? It's like $50,000 going to 500K. It's like $1,000 going to 10 grand. It's like 10 million going to 100 million. They're going to sell. And when they sell, it's going to pull the stock down because they're going to be selling a bunch of shares. It might take them a month to get all of their shares out. But it doesn't mean that that's the end of the company, because it's still only $6 billion in size. The reason why you know it's going to drop 50%, look at that beta. That beta alone tells you that under normal conditions with no volatility, it's going to drop 30% minimum from the highs. You add a little bit of volatility like we going through right now, it's going to drop easily 50, 60, maybe even 70%. When it happens, it doesn't mean that there's something wrong with the company. It just means that if I was smart and I had my money invested in this, I'm not going to let my profits go away. I'm going to let it come. I'm going to sell it. And then I'm going to come in and buy my shares back 50% lower and try to run that bad boy again because the company is only $6 billion in size. There's a way that you play this game. All right. So the next thing I'm going to do is I'm going to break it down. I already broke down how I'm about a company. I still don't even know what the dang company does. So if you don't know what the company does, that's great. You just go to your ChatGPT and we're going to ask it. We're going to ask Chat, what the heck? I'm actually going to write that too. Actually, you know what? I'm not even going to type it. Well, because I don't know the name of Applied Optoelectronics. I don't even know if it can hear me. Watch this. Can you tell me what the heck is Applied Optoelectronics in stock? Let's see if it was able to catch my my Decatur accent. Nope, I don't think it did. Nope, let's try it again. I'm gonna type it this time. What the heck is Applied Opto? It doesn't know Decatur Ebonics. All right. What do they actually do? So now we're seeing a stock chart, which is this, right? I guess it is. I don't remember it being $84, but whatever. Is this the right chart? Hold on. Let's see if this is right. Oh, it is $85. It got the market cap wrong, which is interesting. It usually does it. Now it's saying, I don't know what's going on here. Oh, okay. All right. It tells you that what do they actually do? All right. Applied Optoelectronics is a fiber optics company. Oh, shoot. It's a fiber optics company? In plain English, they make the hardware that moves internet data at lightning speed. Their core products, optical transceivers, laser components, fiber optic modules. These go inside data centers, keyword for this year, AI servers and cloud infrastructure. Who uses their stuff? Amazon, Microsoft. I'm sold. Amazon, Microsoft, Google are your clients. I'm sold. $5 billion companies, sign me up. I don't even need to read nothing else. Amazon, Microsoft, Google, data centers, $5 billion. The only thing I'm looking at now is how far are they off from their highs. When I go back and I look at the highs, I'm going to look at this chart. I'll flip the chart out. We pull up this chart. And now I'm thinking, where am I going to buy it? Well, we already know the beta is high. Joel ain't buying no company with a 3.0 beta at the price that we are right now. There's no way you're going to get me to do this. Are you kidding me? It placed a high of 128. What did I tell you guys about stocks with a 3.0 beta? That means it's going to drop 30% to 50%. Y'all know me. I ain't buying this company unless it gets cut in half. Period. You're not going to get me to buy it higher than that. I don't care who their clients are. So, if we posted a high of 128, where is Joel buying this? Where is Joel buying this company, guys? Very simple. And I'm hype about it. All I had to hear was data centers, Microsoft, Apple, Amazon. I'm sold. Fiber optics? Man, sign me up. $6 billion? Sign me up. Where am I buying this? 64. Period. Don't even ask me. Should I buy it here? No. 64. So what you're going to do, guys, is you're going to go on your charts like I'm doing. And I'm going to see if 64 is even reasonable. So I'm going to create an alert. I've just created an alert to tell me when it gets to 66. I want to get alerted before it gets to 64. I might even buy some at 66. I'm then going to draw a Fibonacci retracement tool. I'm going to draw a Fibonacci retracement and see what that 50% area is going to look like. And that tells me that the 50% area is going to be the $73 area. So if I'm interested in it, maybe I can buy it there. But y'all know me, I want to get it cut in half. So then I'll say, you know what, Mr. Fibonacci, let me go ahead and set an alert right there too. You can't go wrong with having, there's nothing wrong with having 15, 20 different alerts. You don't get charged for however many alerts. You can create unlimited alerts. What I also saw on the charts that you guys didn't see is that the RSI is overbought. That means this stock went parabolic. When Wall Street or anyone that knows anything about the market sees this, it's no way they gonna keep their foot on the pedal. Especially if they have the opportunity to sell. They're going to sell. Who would sit in this after being up 1,000% in 1 year? You would have to be an idiot. 1,000% in 1 year and you didn't sell? If you're in it, I'm sorry that I'm calling you names. But but you should have known it was going to get sold off. All right. 73 would be the first area that I would even consider buying this. That's $10 away. In fact, we printed 78.58. 73.43, you're not even going to get me to even look at this joint. 73.43, I'll pull up the charts again. 66, I'll think about it. I'll look and see what's going on in my portfolio, see if there's anywhere that I can put this particular stocks. What I also would do, guys, before you even think about buying something like this, ask, is this company the leader in its space? So I'm going to go to ChatGPT and I'm going to ask it, is this the leader in its space? If it's the leader, I'm going to buy it. If they say there's other leaders that are better, I might think about buying it. All right. Is this the leader in its space? And what other companies are similar? And let's see what it says. All right. Short answer, no. AAOI is not even close to the leader. Uh-oh, SpaghettiOs. Not one of the leaders? What you mean it's not one of the leaders? Well, who the heck is the leader? It's small but leveraged. It's a smaller company. They're losing money, guys. They have negative margins. Their high growth is tied to AI demand. Translation: they're riding the AI wave, but they're not driving the ship. Well, who the heck is driving the ship? Coherent, one of the largest pure play optical companies, massive exposure to AI plus data centers, industry leader in photonics. Lumentum Holdings, major supplier of high-speed optical modules, deep relationships with big tech, one of the biggest players globally. Broadcom, huge player in network chips, optical connectivity. Intel dominates silicon photonics, big role in AI data center infrastructure. China Power plays, Enolite, and Axelink. Direct similar stocks, guys, is going to be Lumentum, Coherent, and Macom. Adjacent, guys, I'm invested in these: Arista, Marvell, and I'm not invested in Credo. The real truth is AAOI is not the leader. It's a high beta version of the industry. Okay? Cool. So why do they like trading it? Small float, easier to squeeze. So a lot of people are using AAOI as a trading vehicle for now, but it's not the leader. Can it become the leader one day? Of course it can. If you keep doing if you know everything about this company, don't take what we're reading from chat. If you've done research and you're finding out that because remember, they still have a relationship with Amazon, Microsoft, and Google, I think is what it said, right? So, just because they're not the leader doesn't mean that they can't grow to 60 billion. Here. All right, so it just depends on how you guys want to approach a company like this. Okay? It depends on how you want to approach a company like this. The name of this company is AAOI, which is Applied Opto. I think this is a name, Applied Opto Electronics. All right, so that's how I would break down a company like that. So let's break down another one. A lot of you guys are into quantum stocks. So Master Zanitis, if he's still here, he wanted me to break down IONQ. I'm going to ask ChatGPT the same thing about IONQ. What is IONQ. What do they do? Are they the industry leader? And who is invested in them? So we're going to do it backwards. We're going to look up the information first. Then we're going to put, now my GPT is probably going to pull up a chart first. Yep, like it did. So that's fine. What is IONQ? Well, if you were looking at the 1-year chart, you're going to see, why is the 1-year chart not working? There we go. If you notice, it went from $20 all the way to $80, and we've come all the way back, guys, round trip back to $20. The market cap is $18 billion. Okay? Year to date, what have they done? You've lost money. In the last 6 months, you've lost money. In the last month, you've lost money. But in the last 5 years, you have gained about 91%. Okay? So for you guys that don't know what IONQ is, IONQ, guys, is a quantum computing company. In fact, it's my favorite. IONQ is my favorite quantum computing play. I owned it. I'm no longer in it right now because when the market started to sell off, these are the first companies that sell off. So I'm no longer in IONQ, although my sons own a lot of it. Okay? They're building the next generation computers that can solve problems today's computers can't solve at all. Right? They're doing calculations millions of times faster than normal computers. Now, it also says in parentheses, eventually. There are certain computers that are up at this particular time, but nobody has proven yet that this theory can even work. So what do they actually do? IONQ builds quantum computing using atoms and lasers. Y'all hear this? Atoms and lasers to do computing. They trap atoms, they use lasers to control them, and they turn them into qubits, which is quantum bits. This is called trapped ion quantum computing. Why does that matter? Because quantum computers can potentially solve drug discoveries, cancer and new medicines, AI optimization, financial modeling, cybersecurity. You might no longer need CrowdStrike or Palo Alto, right? Logistics, Amazon type routing. Basically, problems that are too complex for normal computers. Now, how do they make money? They don't sell laptops like Dell. They sell access to their quantum computers via the cloud. So you're going to have access to their quantum computing through the cloud, even though the computers are going to be set up in some area, some state. They're going to give you access to it, and they're going to charge you a membership fee to be able to have access to these computers because you can't build your own. Are they the industry leader? They are the leader. Y'all hear this? That's why I own them. Guys, I always own the leaders. I stay away. Third and fourth place have a very, very hard time taking over first and second place. Second place can sometimes overtake first, but usually when these big companies start getting money and that race starts, it's very hard for third and fourth place to ever supersede first and second. All right. So I usually stay away from third and fourth. So when you're buying companies, ask where are they as far as the leaders. Okay. That's just how I approach the market. Maybe you approach it differently. I'm just telling you what I do. All right. They are the leader, but not the only leader. Where they are strong is they are the most popular pure play quantum stock. The highest accuracy in the industry. They got the highest accuracy. They hit 99.99% fidelity. Now, I don't know what that means, but basically they say that their computers are some of the most accurate computers in the world. Now, where are they weak? They're slow. The competition is actually faster. Even though they're accurate, their computers are not the fastest. They're slower than their competitors. They're not profitable. The industry is still early in its stage. Guys, we're still trying to push ChatGPT and AI. Quantum is the next level. We're not even we haven't even bubbled in AI yet. Every single person on this live here, I would say maybe 1 out of 3 of us probably have a ChatGPT or Gemini or Perplexity subscription. When it gets to the point, guys, where you actually have double subscriptions, where you have a subscription with Claude and you got a subscription with Gemini and you got a subscription with ChatGPT, that's when we enter a bubble, right? When you have a Netflix, when you have a Spotify, a Netflix, a Disney Plus, and you got Comcast, that's when you start bubbling. All right, we're not there yet. In fact, there are people on this live right now that they don't even use GPT yet. When everyone is using GPT, everybody, and you're using multiple GPTs, then we can start talking about a bubble. We ain't there yet. All right. Who are the big tech real heavyweights? Do you guys know that IBM is becoming a major player in quantum computing? IBM, Google, Microsoft, Amazon. These companies have way more money and they are building quantum too, so be careful. Now, pure play competitors are going to be D-Wave, Rigetti, and quantum computing. So my sons own D-Wave. I know there's a couple of members that are in the room that were all on top of Rigetti when it first came out. And then you also have QUBT. All right, D-Wave, I think, is QBTS. All right, but IONQ, guys, is still the leader among all the smaller companies. The bigger companies are going to be the bigger names that you already know, the Amazons, the Microsofts, the Googles. And it looks like SoftBank is also an investor in IONQ. IONQ already has strategic partners. Of course, NVIDIA and AstraZeneca. All right. So that's important, right? It's important to know all of these things about this particular company. Again, once I find that information, I go and I run. I run to my charts and I say, all right, when I'm thinking about buying something like this, we already know how big it is in size, which is market cap. If you don't know how to do that, then you guys need to run to your, hold on. You need to run to Yahoo Finance, plug it in real quick, get all the information you need from Yahoo Finance. When you pull up that information, y'all know me. The only thing that's important to me is going to be this middle section here. So let's break it down real quick. When we pull up IONQ, my bad. When we pull up IONQ, you're going to see something like this on Yahoo Finance. Only thing I care about is that 10 billion. Ooh, I love that. If it ever got to be $100 billion company, I make 10 times my money. If it ever becomes $1 trillion company, I make 100 times my money. That means $10,000 in this company will make me a millionaire if it ever got to 1 trillion. Did I do the numbers right? Let's do it. If I got $10,000 and this goes from 10 billion to 100 billion, my 10 grand's gonna be worth 100 grand. If that market cap goes from 100 billion and it becomes a player like a Nvidia or even a Broadcom, and that bad boy reaches $1 trillion in market cap, my $10,000 can go to a million bucks. So guys, if you want to know the formula to get to a million, you need to have 10,000 and something when it's $10 billion in size, or $1,000 in something when it's $1 billion in size. That's how you get to $1 million bucks. It's very simple math. 10,000 here, it will turn into $1 million when this company becomes $1 trillion company. Okay? This is the same formula that I'm using in cryptocurrency. My $5,000 was invested in Bitcoin when it was $100 billion in size. That means when it went from 100 billion to 1 trillion, that took my 5,000 to 50,000. If Bitcoin goes from $1 trillion to $10 trillion, my 5,000 will be worth 500 grand. If Bitcoin ever became a $20 trillion company, my 5,000 would turn into $1 million. That's where I got the formula from. In order for my investment in Bitcoin right now to be worth $1 million, Bitcoin has to have a $20 trillion market cap, which, if that was to happen, it has to be 4 times bigger than Nvidia. I think it can happen. I don't think it's going to happen in the next 3 to 4 years like you silly people out there think it can do. Because y'all just think money just grows on trees. We can just put a quadrillion in it, Joel. There ain't even a quadrillion amount of money circulating on this planet. Y'all ain't doing the math. All right. So that's why I invest $10,000. A lot of you guys wonder why my minimum investment in any company is usually 10 grand. Because I'm looking for things this small. So when I bought Wingstop, guys, I'm putting more than 10 grand in it. Not because I think it's going to hit $1 trillion. It's because I put 10 grand in Wingstop when it was worth $1 billion. So I'm not expecting Wingstop to go to $1 trillion, but I am expecting it to go to maybe 100 billion. I don't know. Maybe in my lifetime. That means that's one of the 10,000s that'll be worth $1 million. Okay? The more 10,000s you put out there and these companies hit $1 trillion, the more millions you're going to have in your pocket. You know the government's going to go out there and print all of this money. So what you're hoping and expecting to happen is for these small baby companies to grow to $1 trillion companies. Because now we're seeing $1 trillion companies. Okay? It's hard to find these $1 billion companies again that are reputable. Back in the day, $1 billion was a lot of money. It's not a lot of money today. It's hardly anything. Like I said, it gets you in the door these days. Million was a pretty decent market cap for a company, and Wall Street wouldn't mess around with them. The numbers keep growing. Maybe in 15, 20 years, guys, anything less than 10 billion is going to be considered a penny stock or on pink sheets. Okay? But you got to grow, you got to grow with the market. You got to see what the market's doing. If the government decides they're going to print $100 trillion, it's going to inflate the market. It's going to inflate these companies, and these numbers that you're looking at now that we think are obscene are going to be realistic. But maybe the buying power is going to be higher. I told you guys a Honda Accord one day when it finally does it, when I finally go on Auto Trader and I'm looking for the day that I go on Auto Trader and I see a Honda Accord brand new for $99,990. I'm telling you guys it's going to happen. And when it happens, we going to laugh about it. We gonna laugh. We gonna say, who would have thunk a Honda Accord would be $100,000 one day? It's gonna happen. Watch, and it's gonna happen fast. Cause I'm already seeing Denali's going for 167. Y'all out here selling Lucids for 256K. Ain't nobody buying no Lucid for $256,000. That's why they lose. Y'all know that they sell them vehicles for $150,000, $170,000, and they still lose $30,000 to $40,000 every time you buy one. Boy, you talking about a Ponzi scheme. Anyway, so that's IONQ. That's how you break down companies like that. All right. Sorry that I wasn't able to get to everybody's stock, but let's look at them real quick. I'm going to miss a trade trying to get to you guys' stock. Let's look at the Millionaire Challenge trade of the day. Let's see if we could have made any money off of Marvel today. So Marvel was on everybody's radar today. This is how I would have traded Marvel. If you were trading the Millionaire Challenge trade of the day, I told everybody in the group chat at 9:30, I said, if you buy this stock, this is going to be the Millionaire Challenge trade of the day. I told them at 9:30, I said, put it on your radar. Oh, you guys can't see it. I'm getting all hyped. Let me put it on the screen. Y'all know I be getting hyped. Hold on. God dang. Here we go. What time was it? 9 a.m. this morning, I said, look, if you want to try the Millionaire Challenge trade and you want to think about how I view things, I said, go after this one. Go after this one. All right, so Marvel, let's see if it paid out. Let's see if you would have made 100% return. Early this morning, and I'm sorry, guys, in the room, I didn't tell you guys what option to buy. So we're going to do it here, right? So let's say we wanted to trade Marvel this morning, and we were looking for what strike to buy. Well, you would have come into Marvel, and you would have looked to see if there was unusual options activity. It was on everybody's radar. Not only was it on everybody's radar, chat was telling us to buy it. They even said it's unusual options activity. All right. So I'm going to show you guys a picture. And I'm going to ask you the simple question that I ask every day, which is, what is the largest number that you guys see underneath my chinny chin chin? What is the biggest? What is the biggest and largest number that you see underneath my chinny chin chin? Here we go. What is the largest number that you guys see? And it has to be unusual. What is the biggest number that you guys see? Put it in the comment section. All right. That's the biggest number you see. That's the strike that you're going to use. What was the second thing that I told you guys in the group chat? Does anybody remember what I wrote in the group chat? In the group chat, what did I say? What did I say specifically? Because I knew some of you guys were going to go out at 9:30 and try to buy it. What did I specifically? Let me see if you guys remember or even saw it. I told you guys something specifically in the comment section. Well, I did say wait, but what did I say wait for? Yep. Denny is right. I said wait. And I said, wait for the down move. I said, wait for the down move. And then as soon as that bad boy starts going green, buy it. I said, but wait for the down move. Even when I'm buying the Millionaire Challenge trade, I'm trying to get it on sale. Even the option. So a lot of you guys don't know how to do this, so I'm going to show you how to do it. What you're going to do is when you're looking at this trade, you're not trading it off of this move. You're not even using a chart. You are, but you're playing the volatility. You're like, yo, everybody and their mama's going to buy this. It's probably going to go down in value. And because it's up 13 or 14%, that means it's probably going to move 3 or 4%. A regular 3 or 4% move in Marvell is going to pay out big in the options market. You are coming into this when you're doing the Millionaire Challenge trade. You are here to rob the market blind. You're not here to hold it overnight. You're not here to spend time and talk to everybody in the bank. You're there to go into the bank, steal it, rob whatever you can, be out of there in your getaway car and gone. In in hours. This is not a hold overnight trade. You want to see what everybody else is buying. You want to rob everybody. And then you want to leave the bag. You want to leave everybody else there to hold a bag. You want to leave everyone else there to hold a bag. You want to rob it, be out of there, and leave them holding the bag. So we knew that strike was the 100 strike, right? So when I go in here, I'm going to go to the 100 strike. That's the strike that everybody and their mama's buying. I'm buying it too. Even if it never gets to $100. Oh well, I'm getting in too. What I told everyone to do is I said, look, you better wait until it sells off. So if you were watching this chart, and if you were playing the Millionaire Challenge trade, you got rewarded today. So why can't I find my drawing tool? Hold on. Where's my drawing tool? Oh, here we go. All right. So we went down in price. I'm looking at a 1 minute chart. We started to go down in price. It's the same exact thing we do anytime we trade anywhere else. We went down in price. Now, some of you guys could have done it here too. I get it. You could have got in at 945. In fact, let's just assume you didn't get the best price. Let's just assume you didn't. Let's just assume you got in way too early, which we didn't know it was early. It was just early. So it sold off in price. I'm going to tell you guys what it shot up to. So when it first shot up in price, early this morning, this option was $140. Now, most of us have $140, right? So you could take part in this trade. But I told everyone, wait, God dang it, wait. Maybe even try to get it cut in half, but wait. It went down in price. I told the room, do not buy this bad boy until you see green candles. You need it to sell off. Then you need to look for green candles after that. So I'm having a hard time drawing this trend line. It went down in price. We didn't start getting green candles until here. I said, well, that's where you need to maybe start. You got about 3 green candles? All right, Joel. I would have bought somewhere around $55. Let's just say $50. All right. You would have been able to buy this for $50, even though the highs were, God dang it. Even though the highs were, what was it? 140? You about to grab this bad boy for $50. Now, I'm going to switch it to a 5-minute chart just so that we can see it a lot clearer. All right. right, so it went from $140 down to $50. Do you guys know that this $50, even if you bought it at a higher price at $100, do you guys know that this $50 right here turned into $200? What? Yes. $50 turned into $200. And you had a chance to get out. Yes, guys, that means $500 would have turned to $2,000. $50,000 would have turned into 20 grand. And there was enough volatility where you could have bought $50,000 worth of this, and it turned into 20 grand. Y'all know how fast it turned into it gave you that three. Wait, let's look at the return. What is the return on that bad boy? The return on that bad boy. The return on that bad boy was 300% return. You would have got a 300% return if you had gotten in at about 9:50. Now, you did have to wait for this one. You had to wait about 4 hours. 9:50 you would have been in. So that's 10:50, 11:50, 12:50, 1:50. You would have been in for 4 hours. Okay? Knowing me, because I had a tea time, I would have bought it for 50 and been out with 50 and would have been mad. And then you guys would have called me earlier like, Joel, you missed a move in your own trade. And I would have been mad, but I would have been happy for everyone that made money. That is a millionaire challenge trade if I didn't see one. You're not going to find any other place, guys, where you can make a 300% return in a day. Not even a day, in the trading session, and you got in late. You got in at like 9:45. You got in at 9:45. So if you guys didn't know what the Millionaire Challenge trade is, this is how you do it. You see it at the bottom of the screen? You mess around and do that 7 times in a row, you'll be sitting on about 100 grand. If you can take the right trades and use the right risk to reward. You can even be wrong. You can even be wrong 2 or 3 times and still get there in 10 trades. Now, when you get to 100 grand, you're going to have a problem. You got to find things that have enough liquidity to be able to support that 100 grand. Plus, if you've never made that 100 grand before, there's a 10 out of 10 chance that you're not going to risk it to try to get to $1 million. All right? That's the psychological, that's psychologically what you guys are going to have to go through. If you've never seen 10 grand, a lot of you guys are going to have issues when you get to 10 grand. If you've never seen $1,000, a lot of you guys are going to have issues. Everybody has a roadblock. Everybody has a number or a value. What value are you guys struggling with? And it's not struggling with making it. It's struggling using it as a not making it, guys, but actually using it in a trade, risking it. That's what I meant to say, risking it. What is the biggest number that you're really, really afraid to risk? Mine is 100 grand. You know, I've risked 50 grand or 40 grand, right? 100 grand? Something about that 100 grand that you're like, dang, am I going to risk 50,000 of it? Am I about to risk a Honda Accord on this particular trade? What is that number that you guys struggle with? Be honest. Mine's 100. Some of you guys is like, I don't struggle, Joel. Y'all don't have any numbers? Y'all don't have numbers that you struggle with? $100, $200, $1,000, $10,000, 15, 20, 25, 30, 70, 80, 100, 1 million, 5K? Okay. $3, Wesley. Hey, I've been there, done that. Like, shoot, I'm down $3. It's a problem. 5,000? don't like to lose anything, but you gotta have some type of risk when you're messing around in this game. You gotta have a risk tolerance. What is your risk tolerance? You gotta get used to that, guys. If you guys wanna take the millionaire challenge, you gotta start understanding what your risk tolerance is, and you gotta be able to withstand it. Because when those extra zeros start popping up, it's a whole nother game. 10K, okay. And 10K that's a lot. The risk. You know what I'm saying? 10K is normal. 10K is the normal number that I see people struggle with on any given trade. Like, whoa, that's a lot. 10K. You got to work your way up. You got to work your way up, guys. The easiest way to do it, though, is let's say you have 50,000. Instead of being in 50 companies, let's break down that 50,000 into 5 to 10 companies. Then you're going to get used to handling $5,000. $5,000 here, $5,000 there. Then you might say, you know what? Instead of having 10% of my portfolio, let me risk 20% in any given trade. And then what ends up happening, guys, is you get used to it and you start, you might sit at about 10,000 for a year. Then you say to yourself, you know what, next year I'm going to double up my investment. And even if you double up, guys, if your portfolios are building and you're trading, right, you can double up. You can be like, all right, this year is going to be 10,000. Next year is going to be 20,000. The year after that, I'm going to be investing 40 grand in any given company. Remember, I got to the point where I was putting 100 grand. Guys, you remember I was putting 100 grand in 2 Bitcoins when it hit 49.9. I had to work my way up to that. Even though I started out blowing up two $50,000 accounts, I've always been a big numbers type guy. And as I got older, I got a little bit more conservative. But I struggle with 100 grand. 100 grand is a number that, not that we don't have it, it's just a number that I really have a hard time saying I'm risking 100 grand on this trade. Like, that's just hard for me. Especially if you have access to it. All right, if you have access to it also, most of us can't have $100,000 sitting in our checking account. We'll spend it. Like, it's going to get spent on something that you need. You're going to find a way to use it. Especially if you own property, you could spend 100 grand just like that. You can do the outside. You can do, cats is spending 6 figures just on landscaping in their yard. I've seen people put up $100,000 retaining walls. All right, so you got to work your way up to that point. All right, cool. So let's look at. I know you guys want to day trade, but let me look at some of you guys' stocks real quick, and then maybe we can catch a banger. All right, but that was the Millionaire Challenge trade. For you guys that don't know how to do it, that's Marvel. That's Marvell. Let's look at NVIDIA. I know I said a lot today. NVIDIA, 170 strike. So the 170 strike for NVIDIA did have... It's okay. It's not unusual. There's actually other... The 170 strike. There's actually other strikes that have more volume. The 175 strike actually has more volume than that 170 strike. So if you were looking at the 175 strike, you were looking at April the 2nd. Today, this is that strike. So if you were trading that strike today, same thing. Same thing as Marvell. We're looking at the 150 strike. I'm sorry, the 175 strike for NVIDIA. If you were in NVIDIA today, look, this is a Millionaire Challenge trade too. Guys, you could have bought this option early this morning for $30. For $30, you could have bought this. That's crazy. Most of us have $30. This was a $30 option. Joel, I didn't know that you can buy $30 options. Yeah, and that $30 option was worth $170 by the end of the day. Anybody holding it overnight? I don't know why you guys are doing this. You know you can get in and out of these options anytime you want to. I know what you're thinking though. If it went from 30 to 172, maybe I'll wake up and it's going to be worth 500. No, it's not. No, it's not. You got theta working against you. You should have got out. You should have robbed the market and took your money. And then you can always re-enter. It's not like that that option ain't gonna be there tomorrow morning at 9:30, people. I really want you guys to be more or less in and out the market the same day or holding things for 30 days or longer. Trading 1 to 30 days is the hardest way to trade on the planet. Even the guru here only wins 50-something% of the time. And I'm good. I'm damn good. I can't get a 6 in front of my percentages. That's how hard it is. Because you don't know what type of information is going to come in. No one knew that NVIDIA and what company? NVIDIA. We just looked at it. NVIDIA and Marvell were going to join forces today. You had no idea. We found out early this morning. Okay. So, we don't know. We didn't know that today Iran was going to say they're willing to negotiate what's happening, in the market. We didn't know that. We had no idea. It could have happened easily on Thursday. They could have waited 24 hours. The market today could have dropped, and then the news could have came out. Okay? This is Nutrien. I don't know what Nutrien does. We don't have much time here, though. But the ticker symbol is NTR. This is one of the companies that you guys wanted to look at. So this is Nutrien. If I was a betting man, y'all know me using the What Would Joe Do method. We ran into a moving average. Once we ran into this moving average, until we break this trend, I don't care what it's doing on the left side. The only thing I care about, guys, is the right side. The only thing I care about is the right side of this trend line. I don't care about the left side. The left side is where you lose money. That's the wrong side. You guys are trying to get into these trades early on the left side. Nobody cares about the left side. Look at the left side. The left side's ugly. Look at this. The left side. Look at the left side, guys. The left side. The right side. The left side. The right side. I want to be on the right side. I want to be on the right side of the trade. All right. The only way you're going to figure out what's the left and the right is you got to learn how to draw a trend line. The left side is usually always bad. And the right side is the best side. Learn how to buy on the right side. All right. Micron. Let's look at Micron. Micron. Boy, y'all are all about y'all tech stocks. Ain't nobody want to look at AT&T and companies. Nobody give a damn about Visa and AT&T. We ain't 97 years old. All right. Sorry for those that own AT&T and Verizon. I didn't mean to pick on your favorite stock, but don't nobody give a damn about AT&T and Verizon. All All right, this stock was overbought. Micron was overbought. Why was Micron overbought? Micron is heavily invested in data centers. Being in this room, you know that this is one of the key words that Wall Street is looking for. Every year, there's 4 to 5 words that we pay close attention to. Data centers, robotics, AI, agentic AI, energy. Those are the top 4. Any company involved with that? Commodities, precious metals. That's what's been running or bubbling. Next year, it'll be another 4, it'll be 4 other different topics. But this year is all about data centers, all about robotics, all about energy, all about agentic AI. If you listen to CEOs speak, I promise you, they're going to say data centers 20 times, AI 37, agentic AI 50, and robotics about 10. They may mention energy because you need energy to move all of these different projects. And then they're going to talk about how they're going to use that energy and what they're invested in. All right, because these the AI and these data centers are going to have to run on something. So those are your top 5. You can add 6 as an honorable mention is GLP-1 if you're into the biotech companies. GLP-1 is an honorable mention. All right. You put those 6 topics down. If your company is not involved in those 6 topics, chances are that's why it's not running to the ceiling. Every year it changes. This year, this is what we all about. Y'all see half the companies we looked at today, 3/4 of the companies that you guys asked me to look at is involved in every single thing that we talked about today. If your company is not involved in AI or data centers or robotics, Wall Street don't care about it. Don't nobody care about Costco right now. They care about Walmart because Walmart is heavily invested in robotics. These companies know what to, they know what to lean in on. Because they're like, look, investors is like, look, we ain't giving you no money and we ain't buying none of your stock unless you buying data centers. So they're forced to do it. Or it's the chicken and the egg. Some people say the leaders tell you what they're doing. If NVIDIA is buying data centers, then that's what you should be buying. I don't know. It's the chicken or the egg. All I know is that you better be talking about data centers. You better be talking about robotics. You better be talking about AI. You better be talking about agentic AI. If you're a biotech company, you better be talking about GLP-1. Or you're not getting any money from nobody. Period. Until the next wave. Okay? This is Tesla, guys. This is Tesla. This is Tesla. Joel, I heard you had a Tesla. I love those Teslas. Tesla is in a downtrend. It is not out of the woods yet. You remember how every single chart we've been looking at, guys, is in a downtrend. Nobody has broken through here. Everybody is on what side, guys? What side is everybody on? What did we learn today? Which side is the best side? What side is every company on right now? What side? Not what side of this trend line is every single solitary company on. Every company is on the left side. You can try to take a shot at something on the left side. I keep telling you guys to wait till we get on the right side. Anybody getting in on the left side, you're jumping in too damn early. Too early. you might be catching a falling knife. Now, there are ways to be in on the left side. What is Tesla doing in relation to its 200-day moving average? Y'all see how there's nothing over here on the right side? And everything is over here on the left side? Ain't nothing on the right side. That's clear space. Nothing is over there on the right side. We broke through the 200-day. The 200-week is in place. And I mean, Tesla was a $500 stock. It was $500. It was $500. It's now $371. It's involved in all of the different things it needs to be involved in. Driverless vehicles, robotics. They are one of the leaders in robotics. If you're really into robotics, you better be in Tesla. That's why Tesla was running earlier, because they were the leaders in robotics. But we have broken this trend, and it looks like it could go lower. It could go lower. It could go to 272. If it gets down in this range, guys, this is when you can buy a fallen knife when it hits the yellow brick road. Do I think it gets there? It could. It would go back. It wouldn't go back to where the April lows were, but it would be close to it. If you want to buy it here, you can. It's holding this trend line, but I don't know. You say, what do I mean by the left and the right side? All right. So every chart reads from left to right. Every chart reads from left to right. The very first thing you're going to learn as a trader is how to draw a trend line. A trend line is this line right here. A trend line is this line right here. When a stock falls in price, it's underwater. So the last time Tesla fell in price, this is how it looked. It looks just like what's happening right here. When this was happening, everything was on the left side. So I tell people, look at all this space on the right side. There's just space over there to make money. Wait until you get on the right side of this wall. There's a wall here. You see this big old wall? This big old wall here. Wait until you get on the other side of that wall. When you get on the other side of that wall, it's just free. There's nothing to stop it from going up. See that? Very simple, basic concept that we stop teaching. We stop learning. Fundamentally, what's happening? Same thing's happening here. Everything is on the left side. Look at all of this space on the right side. See, you want Tesla to get over here. Because once it gets over here, oh my God, it's space to the 550, 650s. The sky is the limit on the right side. Over here is just congestion and confusion. Once people start buying it again and it gets on the other side of this wall, it's space. There's no resistance. There's nothing to stop it from going up. There's all types of things that can stop this from going down. You got your moving average there. You got your 200-day moving average. You know, your 200-day is trying to stop it like a net right now. You got different support areas down here. You got all these different support areas that can stop this stock from dropping. But instead of trying to falling knife, just wait until it gets on the other side of this line. Just wait. It's gonna get there, because if you implement that into the way that you guys look at the market, and that's the what would Joe do method. The what would Joe do method is about getting into these things on the right side. Just wait until it gets on the right side. See, when this went down in price, nobody knew how low it was going to go. But once it got onto the right side, the sky was the limit. No one knew how low this was going to go. But as soon as it got on the opposite side, woo, off to the races. Okay? That's what I mean. Not just when it goes up, it has to go through that wall. See, we can see a stock go up. Look, Tesla was up today. Tesla was up 4.5% today, so a lot of people don't know what up means. Because, see, Tesla was up 4%, but is that up? That's not up. That's still down. It just rose up to this white line. It's literally at the wall, peeking on the other side like, can I please get on the other side of this wall? Please, 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 Mr. Investors, can you guys get me from this left side to the right side? It's still stuck on the left side. Yeah, you see the wall now, right? So even though we were up today, we still ain't on the other side where all this black space is. Let's get on that side. Then we can talk about this stock going up in price. All right. Let's look at Nike and then Microsoft. Then I got to get out of here, guys. Here's Nike. What have I been telling you guys for years? Stay out of this terrible company. Oh my God. Y'all love Nike. Guys, are we on the other side of this? Guys, I'm going to show y'all the line. Here's the wall, guys. I'm going to draw it for you. Here it is. Are we on the other side of this wall yet? If we're not, why are you buying Nike? You guys thought Nike was on sale back in 2022. You thought it was on sale in 2023. You thought it was on sale in 2024. This is 2022. It ain't on sale. This is a 2023. We ain't break above the wall yet. This is 2024. Y'all still think it's on sale. This is 2025. It's now 2026. And y'all, we still ain't gone to the other side. Can you just wait until we get on the right side? If we get on the right side, then you can take a shot at Nike, people. This can go down for the next 3 years. You can't catch a falling knife. But what you can do is when the market starts buying it, it has to go through this wall. It has to. But the market is not pushing Nike through this wall. In fact, they're pulling their money out, making it fall even more. Y'all swear y'all getting it on sale. And I hate seeing y'all lose money. This trend line, guys, this trend line's been holding since 2022. For 4 years, y'all been buying Nike because you won't pull up a chart and you don't understand how to buy on the right side. You haven't been on the right side of the y'all understand why they say the right side of the trade? I know y'all think it's because of the right. This is what it means. You're not on the right side. You're on the left. Wait for it to get on the right. Then you can give yourself a shot at maybe being right. I keep telling y'all want to be, y'all just stubborn. You're just stubborn. Not me. I ain't buying Nike. Get out of here. But I will if it gets on the right side of the trade. Microsoft. We haven't seen a chart yet. I think we saw one stock that was on the right side. It's struggling. It's freaking, every stock is struggling on the left side. It cannot break through this wall of pain. It can't break through. And then it's just getting, the wall is getting stronger and stronger, stopping it from going through.
You
and you guys keep buying.
Yes, I was just trying to come get you
Thank
because
you.
I was
I
trying
just bought
move those
Now,
photos.
why did I buy Microsoft?
Did
There
you
was a
tell it
reason. There
okay?
was a
Yeah,
reason
I
why
said
I
yes,
bought
it's me. Thank
There
you.
was a reason
The
why I
hell
bought
down.
Microsoft. A couple of things. First of all, I don't know if you guys can see it through all of the words. Down here, the relative strength index. The relative strength index is one of the most reliable indicators that's out there that tells us when things are overbought and oversold. It was overbought here, and you see how it sold off, and now it's oversold. I'm buying it here because it's oversold, knowing that it might go lower, but I at least understand that I'm buying it while it's still underwater. It's underwater like, Joel, save me. I was a lifeguard for years, so I'm trying to save Microsoft.
Don't want to.
I'm like, I don't normally do this, but I'm trying to be Captain Save 'em. It hasn't pushed to the other side, but if I luck up and we get on the other side, Microsoft is going to explode in price. All right, so if you grab some today, guys, it's a good area. It's at the Yellow Brick Road. For you guys that don't know what the Yellow Brick Road is, it's the 200-week moving average. It's one of the strongest indicators you can use to buy investments. But you also got to understand that if you're buying it at the Yellow Brick Road, for you Bollinger Band users, if you're at the Bollinger Band and you're at that Yellow Brick Road, that's a very good possibility that we can turn around. If the relative strength index is going off and you're at the Yellow Brick Road, you have a strong chance that we're about to get a reversal. All right. So it doesn't mean that it's going to happen. It just means I'm giving myself the opportunity to be on the right side of this trade, even though we on the left side. But if I'm going to take a shot at something, it's because every indicator is going off that's telling you need to be buying Microsoft. It's a leader. It's one of the top 5 companies on the planet. It's oversold on the relative strength index. We hit the Yellow Brick Road. Like, how many other chances are you going to be able to get it? It's down 35%. So, I mean, if you're going to take a shot at something, this is how you do it. But I would rather for you traders, I'd rather it get on the other side, on the right side, before you guys buy your 60 or 90 or 100-day options. All right. Got to get out of here. Sorry we didn't. Let's see if there was a trade. Did we miss a trade? You guys just got to tell me in the comment section. You futures traders that's out there, you got to be like, Joel, switch over and buy something. We're in a trade, sir. You're missing it. So let's see what we would have done today. Let's see if I stopped you guys from making money. If we were trading this today, this white line here is your VWAP. If I was trading this, it looks like we could have been taking a short now, and it looks like we should have been long at 814. So, yes, we did miss a trade. What would you have done? Well, if you were using Heikin Ashi candles, what was I looking for? This is what I would have been looking for. Let's see how much money we missed out. We missed out on. There's a wick there. There's a wick there. There's a wick here. We should have been in this trade if it pulled back to the 10-day moving average. Let's see if it did it. It really didn't do it until about 822. So honestly, guys, I don't know. You could have taken this trade. If we had taken this trade, I'm going to show you how much money we should have made. At 817, we could have taken this trade at 47.33. Now, for you guys that don't know this, and I'm spending extra time here just because we missed it, let's say we got into this trade at 47.33. Every dollar move, you're going to make $10. So every dollar move, that means every dollar move that goes, you're going to make $10. I'm usually risking, during normal trading hours, I'm going to risk $100 to make $200 or more. During these hours, I'm probably only going to risk $50 to make $100 or $200. All right. So for every dollar move, I'm going to make 10 bucks. Let's say you were in this trade and it went from 47.33 and we would have gotten in at 8.17. We would have been in for 10 candles. 1 candle, 2, 3, 4, 5, 6, 7, 8, 9, 10. We would have been thinking about getting out right around 47.42, although it went all the way to 47.50. In the comment section, for those people that don't know how to do this, how much money could we have made if I wasn't running my mouth? If I wasn't running my mouth, how much money could I have made by the end of this session? If we had gotten into this trade, how much money could we have made off of gold today? Remember, for every dollar move, I'm going to make 10 bucks. For every dollar move, I'm going to make 10 bucks. 17 times 10. I just missed out on $170 messing around with y'all. I promise y'all I didn't make $170 in gifts. So I got to figure out a balance. I need to figure out how to get on here at 8 o'clock so I can get the gifts and I can get the money, right? And then you could have taken a short. Now this candle right here is too big. All right, this candle is too large, so I'm not going to use this candle as one of my short candles. So even though but you know what? These aren't Heikin Ashi candles. That's the Heikin Ashi. So the Heikin Ashi candle would have told you to be short at 8:30. If we would have pulled back up into the 10-day moving average, I would have taken this trade too. I would have been out of this trade with $100. Let's just say I made 100. Let's say I just made $100 there. I would have entered a short right here. Now, we didn't pull back enough to the 10-day moving average. So I'm not going to say that I was in this. But if you were able to catch this short, it dropped from 47.41 to 47.31. That's another $100. We could have made $170 up, $100 down. That's a $270 30-minute trading day. Who would love to make $200 an hour? How much money did you need to take this trade? Well, if you were going to take this trade, I'm going to be honest with you, it's going to cost you a pretty penny. But in order to buy one contract of gold, you're going to need on the Thinkorswim platform, you're going to need $4,148. Now, that's my margin. It might be higher for you guys if you're newbies. Or if you have a lot of funds in your account, you can get a 4-to-1 ratio, and then it won't even be $4,000. It will be about, $1,000 per contract if you got a 4-to-1 ratio. All right, I got to get out of here, guys. I really do have to go. I already cut into my trading time. I can't cut into my quality time. So I want to give a shout out to G7, the one and only, Denny Tyler, Shaq Bully, Safari Don, Master Zanitis, Millionaire Challenge is me, guys. You got Zano 106, Krista Agami, Dr. Harrison at number 9, Kale at 10, and coming in an honorable mention, number 11, is Desmax 2023. Let me give a shout out to those who were able to help me with my live goals. Thank you, G7, the one and only. Thank you, Shaq Bully, Denny Tyler, an undercover organizer, for helping me try to reach my live goals. And I will see you guys tomorrow. Let's trade gold again tomorrow. Hopefully we can make some money tomorrow. But I'll see you guys tomorrow at 6 o'clock sharp. Bring your questions and I'll bring my charts. Later. Peace. Oh, let me change my live goal. I almost forgot.